Gordon, thank you very much for joining us today.
My pleasure.
Much has been made lately of the euro crisis. What impact has that had on private equity?
Well, I think if you look at the regions that are being most impacted by the debt problems, it's the Southern European tier, and in general, very little capital goes in. Private equity capital has gone into those markets, particularly Greece and Portugal, to a lesser extent Spain, and I think in Italy, once it gets south of Milan, there's not a whole lot of private equity. So I think from that perspective, the overall impact on European private equity returns is probably going to be pretty small. I think the broader question is how will it impact the Northern European private equity markets? And personally, I think anytime there's dislocation, it's good for private equity, particularly knowledgeable, aggressive private equity professionals who can drive value creation. In general, if the quality of the portfolio companies is good, if they have diversified product lines, they have diversified customer base, it would be naive to think there's not going to be any impact, but I think there's good companies. I think the overall impact in the long term will probably be de minimis.
How important are emerging markets in your strategy?
So we've been investing in emerging markets opportunistically since the early 90s. I think the emerging markets is still a private equity story to be written. There is some data now that indicates that private equity markets are finally outperforming the public markets, relative to the public markets over some recent time horizon periods. I was in Hong Kong last week, and I have to say the tone there was remarkably subdued compared to prior years. That makes me a little bit nervous. I think if you look at the two major Asian markets, India and China, I think India, people are very negative on private equity and have been for a while. There's simply been too much capital chasing deals. There's widespread belief that the private market's more expensive than the public market and has been for the last several years. I think it's hard to argue that the public market is cheap, although it may have changed given the recent correction in marketplaces. And I think there's a lot of GPs struggling to raise capital because they're struggling to produce returns. I think in China, the asset class has matured very quickly. There's a handful of desirable GPs, and those funds tend to get raised very, very quickly. I think there's the advent of the RMB funds has had a profound impact on the marketplace within China. From what I understand, most of those RMB funds are local Chinese retail capital, which is a dangerous way to invest. I think the dollar funds are having a harder time putting money to work. I think there's some statistics that indicate there's over 2,500 private equity funds in China. They all seem to have the same strategy. We have some special government connection. We're chasing pre-IPO deals. And I think the story there is yet to be written, but I think there's going to be some near to medium term pain in those marketplaces.
What role do you envisage fund of funds playing within a typical strategic investment portfolio?
So look, there's a lot of debate about do funds of funds create value or not. I think at the end of the day, most institutions who use funds of funds or outsource their private equity program are really index investors. At the end of the day, they're benchmarking themselves against the broader indexes for their various asset classes. And I think in general, you can't really index private equity, so I think some of the larger, more diversified funds of funds provide a valuable index of private equity for those investors. I think when you look at the more specialized groups, I think they have an important role, even for sophisticated private equity programs, because they can provide them access to strategies such as emerging markets, small buyout funds, venture, first-time funds, distressed, etc., where they can't get, where they may not have the expertise or the resources to go access those specific strategies themselves.
On balance, do you think increasing regulations are beneficial for the industry?
I think it depends on what you're talking about. I think creating a strong legal system, codified contract law, enforceability in some of the emerging markets would be profoundly beneficial to private equity returns. I think beyond those issues, I think increasing regulation is probably going to have a negative impact on returns.
Gordon, thank you very much.
My pleasure, thank you.